We had the numbers come in. How are you viewing the current market sentiment picture given the data that's been presented today? Because the year-on-year picture very different to the month-on-month one that we're seeing.
I think what we said, at the moment, actually business are experiencing an ambiguous type of situation. You have the rand strength suddenly coming from, one can speculate about it, and then you have high inflationary fears again all over the globe. Commodity prices rising, the unrest in the Middle East actually fueling that situation. There's talk about interest rates rising. There's talk about China cutting back on its production to 7.5% year-on-year type of growth because they're running into physical difficulties with that type of growth. And I think that's the ambiguous situation we're talking about, while in South Africa, although the index is slightly down, as you say, it's still ratcheting upward. But it's slowly. This is a slow process. 2 steps forward, 1 step back type of thing, and this is the way we go.
Of course, this even further so in a context where the picture is so mixed, where there's so many uncertainties, as you've highlighted. Just taking a look at, the indices on the exchange rate and the real cost of financing being negative, and the financial, environment appearing to be leaning towards tighter fiscal conditions, financial conditions in the future. How are you reading that scenario and what it means for business moving forward?
I think the biggest fear is sort of higher inflation. Higher inflation implying sort of more price instability. We saw the volatility in the rand, which is also a price that's quite unstable and which is not conducive to sort of especially foreign trade and that type of thing. So in terms of real cost of financing, at the moment, it's actually by default that we've seen this because if you look at core inflation, that is now excluding, fuel and some foodstuffs and that, you'll actually see that inflation was slightly down in January. But this is now only a situation that's prevailing for the moment, I think. In 2 months' time, it could change dramatically, especially with movements in the rand to say higher than 7, and of course food prices internationally moving moving high all the time.
Absolutely. I mean, looking at that rand, it's gained 3.3% over the last 5 days alone, and cutting losses to what, 3.7% for the year. What's your position as an economist on the rand and where fair value sits?
Fair value, well, we're very afraid to speak out on the rand because we've got a lot of people that benefit from a weak rand, people that benefit from a higher rand. But I think if you look at the economy, which is of course for business confidence over the longer term, I think a slightly weaker rand is more sort of what we would look at. Because, manufacturing, one of your major sort of sectors in terms of job provision, providing jobs, your construction sector, which is down in the dumps at the moment, those sectors we need to sort of push on a bit. And I think that is where our problem lies, especially with a strong rand. It makes it very difficult, actually. As you say, 3% movements in a week, that is not easy to sort of gauge your markets, gauge your prices and put it in the right position.
Taking a look, there's quite a bit of concern about manufacturing output and construction. It's failing to gain pace despite the kind of momentum we're seeing in economic growth right now. Just some of the other challenges that persist on that front, the currency aside?
Well, I think, it's in terms of productivity, but what we've seen in terms of, say, labor costs, internationally, it's not competitive. Let's be clear about that. It's making it very difficult. Although the President spoke about, employment as a major issue in South Africa, and business agreed to that. But one must make it easier, and there's a lot of fronts, actually, that one must look at. The one point we make here is to say that it is perhaps dangerous to see government as employer of last resort. And that this perception being created is perhaps not the way to go. It should rather be an enabling sort of environment, enabling business to do business properly, enabling your workers to be educated and appropriately trained. I think that is the way forward. And of course, important for business is to keep the entrepreneur, but also the entrepreneur, the guy inside of the company, to have him, being fueled and being positive about the outlook on the economy and the sector as such.
So talking about outlooks, where the data today shows that the momentum is certainly not lost, but where business confidence may be severely tested given some of the economic uncertainty and possible price instabilities moving forward. What's your outlook on the sustainability of this momentum?
It's difficult, as you say, the world is sort of experiencing problems at the moment. It's not really the whole world economy is finding it difficult. In the US, they're talking about QE3 at the moment because they're not really getting things going there. And in Europe, we know the difficulties with some of those countries in terms of fiscal sort of prudency and that type of thing, and cutting back on expenditure. We must be careful. We're perhaps moving in the opposite direction to some extent on fiscal issues especially. And therefore, I think for the next few months, shorter term, it might sort of keep there, but things can change suddenly. And economic, business cycles are a feature of any economy. Some people might have thought about 4 years ago that the business cycle is obsolete. It is not obsolete, it's still there. And I think that might contract business a bit further. We must take the opportunity while it's hot.